You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-Mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-Mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Monday, 5th day of December 2022. Hope you had a great weekend. Thanks so much for joining us today. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first live broadcast is from 9:30 a.m. to 11:30 a.m. Eastern. That broadcast is our live training room, and it is reserved for members only and those who are taking their 1-week free trial. If you have not taken your 1-week free trial yet, in a few minutes Michael will show you exactly how to do it, and there's no credit card required. So at 11:30 a.m. Eastern, we take a 30-minute break, and we come back for the afternoon broadcast, the one you're listening to right now. There are 2 different ways to join this afternoon broadcast, one a little better than the other. I'll give you the better way first. You only have to do this once. Go to mytradingiq.com. Scroll down to where it says afternoon broadcast. Click the link. Fill out the 30-second registration form, and then every trading day going forward, before the afternoon broadcast starts, you'll receive an email. In the email, there will be a link. All you have to do is click the link, and it will automatically log you into our platform, and that gives you access to the question box so you can ask questions and participate in the discussion. The second way to join the afternoon broadcast is simply to go to our YouTube channel, which is very easy to remember. youtube.com/CFRN. youtube.com/CFRN. You won't have access to the question box there, but you will have access to both the audio and video of the entire broadcast. Now, with that out of the way, let's open the word of prayer, as we do. Now, we began a topic last week. That topic was winning the war in your mind. It's important for just everyday folks, because the enemy's battleground is your mind. And the topic is especially important for those who have chosen trading as a profession, or those who are learning how to trade as a profession. Our scripture today is Philippians 4:4. I'm reading from the Message translation. Celebrate God all day, every day. I mean, revel in Him. Make it as clear as you can to all you meet that you're on their side, working with them and not against them. Help them see that the Master is about to arrive. He could show up any minute. Let's flash back to Paul. He's in prison. Not for a crime, but for speaking about Jesus. He may be executed. He writes to his friends in Philippi, "Rejoice in the Lord always. Then he sounds like your mama because he repeats himself. Just in case you aren't listening, I will say it again. Rejoice. It's a great verse for a coffee mug and one of those pretty cursive fonts. Rejoice in the Lord always. It's perfect for a refrigerator magnet, put it on a greeting card. Of course, it makes you sound spiritual if you tell your friends, rejoice in the Lord always. Full disclosure, I hate it when people quote that verse to me. If I'm in the middle of a difficult situation, or I have a flat tire and it's 102 degrees outside, or I just found out I need to have my tooth extracted, or my kid is sick, and somebody says, hey Dwayne, just rejoice in the Lord always. I'm only human. One reason I hate it is because I have to wonder about the person who says it. Do you rejoice in the Lord always? Really? You might wonder about Paul. He told people to rejoice in the Lord when he was in prison. But he did rejoice in the Lord when he was in prison. He actually did. Paul, along with his buddy Silas. Can you picture them? Thrown into prison, landing on the cold, hard ground with open wounds, maybe a broken nose, a couple of broken ribs. No doctor, no nurse, no band-aids, not even any ibuprofen. Have you been there? Perhaps you hit the ground when you found out someone you love had cancer, or that your kid was on drugs, or that your spouse was cheating on you. In those tragic moments, what do you do? What did Paul and Silas do? In prison, they praised God. What was Paul doing in prison? Rejoicing always. First, they were praising God for the who, not the what. They were bloody and bound up in prison. If you had asked them, what are you praising God for? I don't think there was any what that they could point to. Nothing good was happening, but their God was still good. They weren't praising God for the what, they were praising Him for the who. And you and I can do that too. Your circumstances may be bad, but your God is still good. He is near. His promises are still true. His love still unconditional. His grace still amazing. His timing still perfect. You may not like the what of what's going on, but you can still praise God for the who of who He is. And second, they were praising God before the provision. So often we hold off on praising God until He provides what we want. Think about it. Doesn't it sound like an entitled little snot-nosed kid? I won't be grateful until I get exactly what I want. Well, you got a PlayStation 5. I wanted a Switch. Okay. We're better than that. And more important, God deserves better. Paul and Silas praised God before He answered their prayers or changed their circumstances. And friend, that's the kind of person I want to be. Third, they were praising God and then He showed up. Paul and Silas were worshiping God in the middle of the night, and boom, God showed up. In Acts 16:26 we read, suddenly there was a massive earthquake and the prison was shaken to its foundations. All the doors immediately flew open and the chains of every prisoner fell off. They did not praise God because He showed up. God showed up because they praised Him. When we praise him, he will show up. When he shows up, it will change our thinking. And if we change our thoughts, we change our life. Join me in a word of prayer. Heavenly Father, my mind is exposed daily to things that are not holy or pure, so I know that I need more of you, Christ. It is also hard to focus on the good when my mind is replaying all the bad things that I've done. There's a constant barrage from within and without, and I need your help. Please guide me to scriptures, places, and people that can help cultivate the mind of Christ within me. It's in Jesus' name we believe and pray. And everybody said, amen. All right, let me give you the numbers from around the world. We're going to start here in the U.S. with the cash markets, or the indices as they're called. After that, Michael will come and give us a recap of what happened in the live training room. And then I'll come back and we'll go over the Logic 247 alerts, the concierge trade alerts, and just take a big picture look at what the markets have done over the past week. Right now, the Dow is down 379 points, a little over 1%. NASDAQ is down 175 points, 1.5%. S&P 500 down 58 points, 1.5%. Russell 2000, our man in the street, down 46 points. That's 2.5%. In the commodity basket, crude oil down $1.18, trading 78.80 last, a drop of 1.5%. Gold down $25.20, trading 17.8440 last. That's a drop of over almost 1.5%. Silver down 87 cents, trading 22.38 last. That's a drop of almost 4%, and also a drop of almost $5,000 per futures contract traded. In the Asian markets at the close, Nikkei posted a gain of 42 points. Shanghai rose 55. The Hang Seng gained 842 points, 4.5%. And in the European markets at the close, FTSE up 11, DAX down 81, the CAC down 45. So that gave us a green day in Asia. It was a mixed day in the UK. So far, it is a big red Radio Monday here in the US of A. So with that, we'll go to Michael if he's ready and get a recap of everything that happened this morning in the live training room. After that, I'll be back. We'll look at the logic alerts, the concierge trade alerts, and just a big picture look at what's happened over the past week. It's been quite a roller coaster ride, with the Fed speaking and markets reacting violently to the upside. And the following day, I believe the title of the show on YouTube was "This Just a Massive Head Fake?" And it's really starting to look like that. So, but we'll get into that more as soon as Michael is finished. Michael, are you ready? I see that you're logged in, but you may not have.
Okay, there it is. There it is. It took it a second.
There he
I was
is.
looking on it.
Thanks, Valerie.
Okay.
Okay, Michael, if you're ready, you can take it away.
All right, here we go. Bring it over here. Hold it. Here we go. All right.
All right. I
So
can see your screen, so it's all yours.
great. All right. Here we go. Let me bring up the thing. Here it is.
Always got to bring up the thing.
Got to bring up the thing. Here's the thing. All right. So here we go. Good afternoon, everyone. Today is Monday, the 5th day of December, 2022. Now, if you've not taken a free trading with us, go here to mytradingiq.com. And right here, all you have to do is click on this button to sign up for your free 5-day training and trading now. Or you can just scroll down, watch a video, click register for training now. You can click that. You can go down to here, click it down here. Any number of ways you can sign up for the free trial. Once you do that, you should go in here and download the trading platform. Okay, you're not going to get the most out of the trial until you download the trading platform. So go in here, pick one of the platforms that we use. You can use DT Pro. That's what I use. You can use TradingView. I use that also. You can use NinjaTrader. I have that, but I don't use it. You can use either one of those. All right, any one of those will be fine. Take a look at the trade rules. These are the rules that we follow over and over and over again. Same rules all the time. Always same rules. Some videos in here of me using those rules. You can watch the videos if you want to. All right. Now, apparently my spreadsheet went away. So let me bring up my spreadsheet. Here it is. So we had a pretty good morning this morning. We had, when the news came out at the top of the hour, we had 2 trades on. There were 3 actual trades that triggered, but we were able to get 2 of them, and we're able to benefit from that really well. We didn't take too many trades this morning because we did a lot of training, but we still had pretty good outcome. Okay, so here we go. Now, if you're going to read the spreadsheet, you got to read all CFTC risk disclosures down at the bottom. Today's the 5th day of December, 2022. We made 47 ticks in crude, 30 ticks in gold, and 50 ticks on the ES. Put us at 13.95 on the morning session. Today it took 1 minute and 1 trade to get to the goal for the day. That was actually in the pre-market, but it was recorded, and there were people in there in the room with me when I did it. And I took a total of only 11 trades this morning. So on the month now we're at $2,582. That is over 3 trading days, averaging $860 per contract per 2-hour trading day. Let me just scroll down a little bit more in here. Okay. Yeah, $860 per contract per 2-hour trading day. We've now gone 229 out of 229 business days so far this year, getting our goal. Our goal again is just $100 profit. And we've gone 290 consecutive business days since our last negative day in the room. Now, on the year, that puts us now at $227,928. That is 1 contract, 2 hours per day. Over 229 business days, averaging $995 per contract per 2-hour business day. That doesn't seem to have gone up enough, but we got to get that back over $1,000 a contract. All right. By the end of the month, by the end of the year, we want that back over $1,000 a contract. That said, if you were to quit trading when you get your goal for the day and you were to add 1 contract per month, again, the goal only being $100 profit per contract. So like this morning, $100 profit with 12 contracts would have been $1,200 profit in 1 minute. If you were to quit trading when you do that, you would have only had to work 39.68 hours so far this year. And you would have averaged $5,405 per hour on the year. It seems like it went up a lot. We have to make sure the math's right on that, but something around there. All right. Anyway, let's get into the trades. All right, we didn't have that many trades today, so it's going to be kind of quick. But we did take a moment of time and go through a lot of the trading, and I did actually start 15 minutes early today. That said, our first trade on gold was right here, and this was our only trade on gold. We had 30 ticks profit right there. That was our only trade on gold. When it started, I was taking a short right here on the down close below this trend line with bearish separation, and I didn't have a target on the trade. You guys that are in here right now who are in here for the first time, you may or may not have noticed that when I put trades on, like that, now that's a buy stop limit, so it's not an actual trade, but my stop is right there, but you see I have no target on the trade. I leave the targets wide open because I want to be able to take advantage of big moves like that. Okay, if you look down here at the bottom, my stop is 10 ticks away. Okay, my target is not checked. So it does not put a target on. If I had that checked, then every time I put this on, like if I put another one on right there, now I have a target and a stop. Okay, but because I didn't have a target on, I was able to take advantage of that huge move. So I don't put targets on my trades until I see a reason to have a target on my trade. Okay, just point out a little bit more of the obvious. Right there, we picked up 30 ticks on that move, and then we didn't trade again on gold. Oh, we did trade one more time. We had a break even over here. Sorry, we had one break even. I'm gonna have to fix that in the trade total. Write that down. One more break even. There were no more trades that set up during the morning session. If this would have been a red bar or a white bar, we would have had a trade right there, but it wasn't. During the break, they triggered one right here. Looks like it probably would have stopped you out. It would have been really close. It probably would have stopped you out. One more right here would have given you a little bit of profit back, and that was it. There really wasn't a lot of opportunity today in gold. Oops, let me put this back. Hold on. Okay. The crude oil, we had some good trades in crude today. And we started out, crude is where we got our goal for the day in the pre-market also. Okay, it was right here. Now, it was recorded this morning. There were some people in the room when I took this, and I walked through the whole thing about having this be the low of the bar and the high of the bar being up there and putting the buy stop on ahead of time. I actually showed the whole thing, put the buy stop on ahead of time. It got filled. I put in my target. I gave target numbers where prices should go at some point during the day, and based on the information that we had at that time. But I put in my target to get the goal for the day, and we filled that target, went through it a little bit more. Came back down and gave another move up right here, but the bar color was wrong, so we didn't have a trade. Over here, there was no trade because the green line was all the way into the cycle. Then over here, we took another trade with one tick. Then in here, we missed this right here. There was a red off a red, it looks like. But I took the follow-up trade right here. I got 5 ticks on that, break even there. I think I got 7 ticks on this, 6 or 7 ticks on that, maybe 8. And then I got 18 ticks on this, right? That is when the news came out. This red off a red happened. I don't know how I missed that. That was actually, this is when the news came out. I missed that when the news came out. This was before the news came out. And maybe I didn't get 18 ticks on that, did I? No, I didn't. I got 13 ticks on that. But this is when the news came out, and I missed that one. That was a red off a red. I wish I would have gotten a piece of that, but I did get all the other stuff. Now in here, I thought it was going to go up and then push down. It did go up. It didn't push down immediately. It eventually pushed down, but did go up, and it didn't give any other trades in here. It gave one long trade right here, but as far as blue off a blue and red off a red, it didn't give any of that until all the way over here. Give a red off a red here. And I can't really see the ribbon all that well in there, but it gave a red off a red here. That would have been a break even. A red off a red here. That would have actually worked out once it got going. In here, a couple of trend line trades on the way down. We had another break even in there. We stopped out here. So at that point, we had gotten all the way up to 44, and then we stopped out, went back down to 34. And this is where we got 13 ticks. So we'd gone from 26 to 44. So there was an 18 tick trade in there. Okay, so that was 18 ticks back there. Back here, that was 18 ticks. Okay, and that got us from 26 to 44. And then we stopped out, went down to 34, and then we got 13 ticks here to get us back up to 47. And that is where we ended it for the morning session. It got really choppy right here, right at the end of the morning session. Going into the break, there was one blue off a blue right here. It turned around and gave a trend line short trade right there and right there. Turn around again, gave a blue off a blue right here. Okay, now this would have been hard for me to take right here because in the scheme of things where the market's going up and down and up and down, it was going down and up. And this right here was the trend line that it had to break. And down and up, it didn't break it. It gave this blue off a blue right here without breaking this. So there was no real commitment to the upside. And it didn't go up, it came back down, it gave this right here. Okay, so you would have gone short again right in here. Okay, with the bearish separation, if you had bearish separation, you would have gone short again right in here. But there was no bearish separation, so you would have had to wait till there was red off a red right here. And you did actually have bearish separation at that point. So you could have taken a red off a red there. That was during the break. This would have been a blue off a blue that stopped out right there. Okay, it would have been followed up by this red off a red right here. That would have probably gotten most of that back. And that was it. That was it for crude oil. We ended with plus 47 on crude. All right, now the ES, we didn't have too many trades on the ES, but we'll go through everyone we did have. And we started out here with this. And our first trade on the ES was right in here. We picked up 10 ticks profit on that one. Then we had a break even, another break even, and this is the one on the news. Now it went all the way down here. We picked up 10 points on this. All right, we shorted up here. We were short up here at 40, I think, and we covered over here at 30. I know I pointed at 28, but it was really up here at 30 or something like that. It had gone all the way down here, and the way that it worked, it happened so fast that it took the DOM a minute to catch up. You know, the charts had totally not done anything. The DOM was just, it just disappeared, and then when it started to come back, I was able to put a buy stop at plus 10 points to lock in some profit. And they came back up and took me out at that plus 10 point part. And then it got sideways here a little bit. Then we did the moment in time. I really didn't know what it was going to do. It was either going to go up or down. And you know, that's why I highlighted this whole area. I put this line up above where it was and this line down below where it was, saying it was going to go either up or down in between there. And it actually went up right out of that area. Got real choppy again all through here. There was a blue off a blue right in here that I probably wouldn't have taken because I would have been waiting for it to get out of this chop. In here, there was a red off a red right here. That would have stopped you out. And I thought there was a blue off a blue. Yeah, there's a blue off a blue right here. That also would have stopped you out. Now in here, the problem with this one, we didn't exceed the high right here. So the whole up down thing with the trend continuation, they gone up and down and up and down and right here. Exceeded that just a little bit, but then it went up, and I would have liked to see it exceed that, but it didn't. Then it came down and it gave a blue off a blue bounce right there that, you know, just following the blue off a blue rules, you would have taken that and you would have stopped out right in here. And then probably should have just not traded again. But if you did, not traded again until it got out of this mess. Okay. But if you did, you would have had to stop out right there going short. So you would have stopped out once here and once there. And then you could have taken this because it did break out, but it also broke out at the bottom. So I probably wouldn't have done anything with this. I mean, I know I didn't because it was during the moment in time, but if I were watching it, I probably wouldn't have anyway. And our next trade was here. It was a break even. So during the break, it looks like there was nothing you could do in here to go down through that level. There was a short right there you could have taken, a short right there you could have taken, and a short right here you could have taken. That was it. Okay, so it wasn't terribly hard to trade in the beginning, and then it got a little messed up toward the end. We did have some high impact news come out today. Let me go see what that was. You know, Dwayne will probably with more detail, but if I just go here and look here. Come on.
We really tanked on the ISM numbers that came out at 10 a.m.
Yeah, that's what it was. ISM. Here it was. ISM services PMI came in at 56.5, and they were expecting 53.5. Factory orders also came in at 1%. They're expecting 0.7. And
so the number came in better than expected, but yet the market still fell apart.
Yeah, it was probably already built into the market, and they were anticipating.
Once upon a time, if it was good news, the market went up, and if it was bad news, the market went down. But that's not the case anymore. So that's why we recommend not trading high-impact news events. Let the dust settle, and then when the market regains its normal rhythm, you're ready to go back to work.
Yes. All right, so we don't really have any news tomorrow. So we shouldn't have any issues with news tomorrow. We have, in the pre-market, we have trade balance, low impact news event, but it starts up again on Wednesday. More high impact news on Wednesday, then medium impact news on Thursday, and Friday, more high impact news pre-market. And I don't really consider this high impact University of Michigan stuff, but they market as high impact.
It used to be, but once people realized they could buy the report before it was published, it lost its jam.
It's luster. All right, so back to the spreadsheet now. I did all of those. So if you're, I don't know if I went through this again the second time already. If I did, I think I did. Anyway, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures. I'm going to go through it really quick. I made 47 ticks in crude, 30 ticks in gold, and 50 on the ES. Put us at 13.95 in the morning session. Today, it took a minute in the trade to get to the goal. At that point, we're up $100 a contract. With 12 contracts, we're up $1,200 a contract in 1 minute. And we took a total of 11 trades. So on the morning session, we're up $1,395 with one contract. So if you do 13.95 times 12, we're up $16,740 per contract this morning with 12 contracts on. So this whole thing down here, where if you quit when you get your goal for the day, and the average hourly rate, you know, today we averaged, well, we worked for 2 hours. I didn't take any breaks. So we averaged $8,370 an hour this morning with 12 contracts on. So, no, it's not like you sit there and work for a full hour. You sit there and work as long as it takes to get the goal for the day. All right. So anyway, all that stuff, 111 on the month now, $2,582 over 3 days, averaging 860 and 229 to 229 so far this year. We've gotten our goal every day this year. Every day has been a green day this year. It's never been that way before. We've gone 290 consecutive days since our last negative day. Again, it's been over a year since our last negative day. It's never been that way before. And on the year now, we're $227,928. So we have 25 calendar days left to the month with how many trading days left out of that? 4 this week, 5 next week, 5 the week after that. So that's 14, 15, 16, 17, probably 17 days left that we're going to be able to trade. Well, I'll probably get my goal of 230, maybe 240. 250 was a stretch, but we'll see. Anyway, if you were to quit trading when you get your goal for the day and you had 1 contract a month, you'd be trading 12 contracts right now, and you would only have to work 39.68 hours so far this year, averaging $5,405 per hour on the year. Now, if you have not taken a free trial and you want to, go here to mytradingiq.com. You can click right here. It says sign up for your free 5-day training, 9:30 to 11:30 Eastern time. Really, sign up for it right there. If you're going to sign up for it, download the trading platform, look at the trading rules, watch the videos. You'll be prepared for the room in the morning. You won't be overwhelmed when it starts and I start rattling off a whole bunch of acronyms and saying an up close of this and a down close of that and all that kind of stuff. All right.
And before you hand everything off to Dwayne,
Yes.
I wanted to let you know that I've gotten a number of requests for the video from today's live training room. It was great education this morning. So what I have done is posted it in the weekly workshop channel. Okay, so if you all want to see a replay of this morning's live training room, you'll find it in the Partners Weekly Workshop channel on Telegram.
Okay, excellent. Thank you, Val.
No, thank you.
All right, guys. With that, I'm going to pass it back out to Fabulous Phoenix.
Thank you. Did you
Yes.
happen to see Chris's question? Did you already answer that?
Oh, no, I didn't. I'm sorry. Hang on. Let me open up the question box. Sorry, Chris. I did not post it in here. Is the trading software download iOS compatible? Why trade ES versus NQ after the trial? How much is membership? Okay. All those things I can answer right now. The after the trial thing, we'll send you an email explaining what you get. Number one, is the trading software download iOS compatible? The Trading View. I mean, I can put it on my iPhone. You know, I actually showed a picture of it last week on my iPhone. Let me see. I sent it to Val, so I don't have to go through the whole sending part again here. Let me just scroll up to that. I'll show you what it looks like on an iPhone. You can
also put it on an iTablet.
Yeah, you can put it on a tablet. You can put it on whatever you want. I'm trying to hit page up, but this is that new keyboard. It doesn't seem. Here it is.
I guess you could put it on an Android too, most likely.
Yeah. Oops.
I just don't have one to test it on.
Here's what it looks like on my phone. Okay, that was from last week. But it's the same stuff. You see the slingshot down at the bottom, the bars, and everything up here on the top. So you can. So yes, it is iOS compatible as long as you have Trading View, and you, Chris, particularly because you're using TradeStation, we get your TradeStation data into Trading View. So yes, it will be. I trade the ES versus the NQ. The NQ is just too volatile. I like to have everything be the same time frame. In the NQ, a 7-tick range is not big enough. You need like a 15 or a 20-tick range for the NQ. Okay, but for simplicity's sake, when I'm training in the morning, if everything is the same time frame, then you're using the same time frame with the same trade setup and the same set of indicators, doing the same thing across all these markets. That's why I don't do the NQ. Okay, you can do the NQ. I don't recommend it, but you can do it. I do the YM.
I do issue logic alerts on the NQ, but whereas the initial target on all the other markets is to get that goal of $100 per contract per day, on the NQ, the initial target is $200 per contract per day, because you have to risk more, as Michael just said, in order to capture the 10 points at $20 a point, or actually you need 5 points at $20 a point to get your $100 per contract.
Yeah, if you want to trade something that's $5 a tick, I would go to the YM. All right, you don't have to have such a jump between the YM and the ES like you do with the NQ. The NQ is just too volatile.
It really is.
Okay, for this small time frame like this, anyway. Now, if you want to do it on a minute thing or some other type of chart, then you have to do like I said in the morning. You know, when I went over the minute stuff this morning. You know, like I could change down here. I have like this is the Russell. You could do the Russell. It's all the same stuff on the Russell.
In a few minutes, you'll see me break down the NQ on the 30-minute chart, which is what all the alerts are built off of. So that might help give you some more understanding.
Yeah. But, okay. There you go. So with that, we can pass it back out to Fabulous Phoenix, Arizona in the studio. We're looking something out. Look, there's a red off a red right here. You see that? Red off a red, and you have separation. It's a beautiful trade right there. You want to take that every time you can. And it should go down through 4,012. And let me give you a real number where it should go down to. Hang on. Let me give you the next target number down. Is going to be 4,010, actually. It's going to be what there's one at 4,012 happens to be the low of the day, but it's going to go through that down to 4,010. And 4,925 is what it's looking like. Okay, it may not do it all at once, but I think it's going to. Right here, you're looking at 4,010 right now, and then 4,925. There are a couple other spots on the way down. 4,011 is one of them, where it might bounce off and come back and give you a second leg. But that's what it's looking like right now to me. And the entry point would have been up here on red off for red right here at 15.25. Right, no trend line is needed for that because everything is red. Okay. All right.
Okay, I'll grab the screens. Okay, before I ask you for the recap of the recap, I want to comment.
Yes.
As Michael was doing the recap, as he went through the ES, there was a point where he said, and he had an ellipse drawn on the screen. He said, at this point, I didn't know which way the market would most likely go. And it's during those times that you want to sit on your hand until our strategy and indicators clearly show you not what's going to happen next, but what the next high probability move is. So I don't care what people promise you, I don't care how many crystal balls they have, algorithms, indicators, oscillators, nothing can predict the future with 100% accuracy. However, with our strategy and our indicators, you can know with a high degree of probability what the next high probability move is in any market, in any time frame. So now the all-important question, recap of the recap.
Today it took 1 minute and one trade to get to $100 per contract.
Good job.
Thank you. Thank you.
All right, guys. Moving right along, I'm going to jump to the recap for Logic 247. Now, for anybody that's new, what is Logic 247? It is our around-the-clock, 24/7 E-mini alert service, which also includes crude, gold, silver, bonds, and the euro. The alert channel opens for business Sunday night at 6 p.m. Eastern. That's when the Globex futures markets open, and the channel remains open around the clock until Friday afternoon at 5 p.m. Eastern, when the global futures markets close for the week. So an alert could come out at 2 a.m. or 2 p.m. We have traders around the globe and futures trade around the clock. Our day sessions, their night session. So that's one of the things we really like about futures. There is a 1 hour break every day from 5 p.m. to 6 p.m. Eastern. So it is the Monday session until 5 p.m. Eastern today, and the markets go quiet for an hour, and then at 6 p.m. Eastern tonight, the markets will reopen, and that will be the beginning of the Tuesday session, even though it's still Monday night here in the U.S. Now, since we launched Logic 247 227 weeks ago, we've now issued over 12,700 individual handcrafted alerts. The alerts have time built into them for you to get the alert, look at your chart, and get prepared for the trade that's about to potentially happen. And the main purpose of the alerts is a training tool. Can you just trade the alerts and make money and not have to worry about learning how to trade? You know, sadly, some people do that, but the day will come that they regret not having taken advantage of the opportunity that they had to learn how to read the chart, read price, and know when to get in and when to get out without anybody having to tell them so. Because the information that the chart gives you is the purest form of information that you're ever going to get. When you hear Michael call out a trade, okay, the information on his chart has been filtered through his mind, his way of thinking, and then he delivers it to you. Same is true for me with the alerts. Okay, I look at the chart, it gets filtered through my mind, and then the alert comes out. So typically you'll never have to trip over your feet to get to the markets or get the trade on. And if you miss a trade, don't worry, another one will come along. Okay, so I specifically build in time to the best of my ability so that you're able to study the alert and study the chart, so that over time you begin to see those windows of opportunity yourself without anybody having to tell you. And that should be what you want, to become self-sufficient. Once you've got it all nailed, we hope you'll still remain a part of our very vibrant community, because just as our current traders will help you, the new person, when you first come along, we like to think that, again, as you get things nailed and stratified and etc., that you'll be willing to also help the new folks that come along in the discussion group. We are a community, and that's how we treat each other, with dignity and respect. Okay? And while you're on the trial, you'll have access to the alert trial discussion group. Everything that gets posted in the members discussion group, I forward most of it to the trial discussion group. So you're getting that a little bit delayed, but the alerts in the alert channel and the trial alert channel And the CTAs, those are coming to you live in real time. Okay. Now, on an average week over the last 227 weeks, and over 12,700 individual alerts. Now, each alert in Logic has an entry, an initial target, in many cases a second, a third, a fourth target, and then a final trade to target. If it's a long alert, the final trade to target will be the zone overhead. If it's a short alert, the final trade to target will be the zone below. Okay. Now, what we've averaged is 20% of the alerts or less do get stopped out each week based on not risking more than $300 per contract per trade, less when possible, using market structure and a very simple three-step process that we teach all of our passport holders in your unlimited one-on-one private mentoring sessions. So since the markets opened last night at 6 p.m. Eastern, we've issued a total of 22 logic alerts, 3 never triggered, still awaiting the outcome of 7. So we've had 12 actionable alerts, of which 2 or 17% would have been stopped out based on that maximum risk profile I just explained. And again, that's the maximum. We want to risk less when possible based on market structure. And it's in the one-on-one mentoring sessions that I teach you how to read market structure. Now, we still have our original alert service, the concierge trade alerts, and they differ in a couple different ways. Let me bring those up and show them to you. Last night I put the CTAs out before I put out any logic alerts, I got a little bit of a late start last night. Normally the CTAs will come out right after the Globex Open, which is 6 p.m. Eastern, so 6:20, and then I was running late this night, 6:30, 6:25, okay? And so once those are posted in the channel, okay, members have a CTA channel, and for those on the trial, I post the CTA alerts in the Logic Alert channel for you, okay? As soon as the members get them, if you're on the trial, you get them too. Now, we cover all the same markets, but both kinds of alerts. However, the CTAs are based on historic price action, whereas the logic alerts are based on current price action. When current price action meets historic price action, that's where you'll find some of your best high probability, low risk trade opportunities. And that's what we're always looking for. Anybody can put on a trade. You don't need any training to click the mouse. But to put on a high probability, low risk trade, you got to do some work. You got to show up for class. You got to ask some questions. You got to book some mentoring sessions. Okay? So let's just use the ES as an example, because you probably don't trade all these markets. Not yet anyway, especially if you're new. Certainly don't recommend it. When this gets posted, go to the market that you do trade or markets and make note of where price is at this time. It's always going to be between these two numbers. You should draw a line in the sand at 40.79, draw a line in the sand at 40.55. From the moment this is posted, if price starts trending up towards 40.79, above the BBC, then that's bullish. So our strategy will be looking for opportunities to be long the market. On the other hand, if price gets below the BBC and starts trending down towards 40.55, that is bearish. So our strategy will look for opportunities to be short the market. In either case, that's where you'll use Logic 247 and everything you learn in the live training room every trading day to yourself find opportunities to be long or short the market. And remember, eventually we want you to become self-sufficient. Hopefully you yourself want to become self-sufficient. Okay? And so, before we go to the charts, I have 10 things you need to know today, December 5th, 2022. Number 1, Iran's Attorney General reportedly said Sunday the country has shut down its controversial morality police and is considering changes to a rule requiring women to wear head coverings in public. That's big news. The news came after weeks of anti-government protests ignited by the death of a 22-year-old Kurdish Iranian woman, Mahsa Emini, after her arrest by the morality police, allegedly because she was wearing her hijab improperly. I mean, she was wearing it, but it just didn't meet the standard. The state-run Al-Alam television station later pushed back on the claim that the morality police had been disbanded. CNN reported no official of the Islamic Republic of Iran has said that the guidance patrol has been shut. Courtesy of the Wall Street Journal and CNN. Number 2, courtesy of the New York Times, the Old Gray Lady, and The Hill. Several Republican lawmakers on Sunday rebuked former President Donald Trump, who last month announced he was running for president in 2024, for his call to suspend the Constitution over unfounded claims of mass electoral fraud in the 2020 presidential election. Representative Mike Turner of Ohio, the top Republican on the House Intelligence Committee, said on CBS's Face the Nation that he vehemently condemned Trump's remarks. Other Republicans, including House Minority Leader Kevin McCarthy, kept silent about the comments which Trump made in response to a Friday report on discussions at Twitter about the company's decision to block links to a New York Post article about emails found on a laptop of Hunter Biden, who, as we all know, is the president's son. Number 3, courtesy of the Washington Post, a post-Thanksgiving rise in coronavirus infections pushed COVID-19 hospital cases to their highest level in 3 months. More than 35,000 COVID patients are receiving care, intensifying pressure on health systems already busy with waves of influenza and RSV, which is widely known as the technical name is respiratory syncytial virus. I just had to try. Nearly 20,000 Americans were sent to hospitals with influenza during Thanksgiving week, the most in the holiday week in more than 10 years. Public health officials are concerned the combined surges could overwhelm some hospitals. According to Nancy Foster of the American Hospital Association, the real concern is we will see a large influx of all of them, really stressing out the hospital's capacity to care for these very sick patients. RSV is no joke, guys. And if you get it and get over it, there's a lingering, hacking cough that'll stay with you probably a couple weeks. But most of the people I know who got RSV started to feel better after a few days. So, number 4, China continued easing stringent policies to limit coronavirus infections on Monday, with commuters in Beijing and at least 16 other cities allowed onto buses and subways without a COVID test within 48 hours for the first time in months. Industrial centers, including Guangzhou near Hong Kong, have lifted most of their rules under China's zero COVID strategy, allowing markets and businesses to reopen, but kept the restrictions in place in neighborhoods with high infection rates. Beijing has allowed cities to dial back local restrictions without linking the changes to anti-lockdown protests or signaling when the national zero COVID strategy, which has confined millions of people to their homes, might end. One of China's largest cities, 25 million people. You've seen the news clips, I'm sure. People were actually nailed into their homes. A family even died in a fire because they were unable to get out of their home because they were nailed in from the outside. Number 5, courtesy of the Atlanta Journal-Constitution and Axios, Senator Raphael Warnock, Democrat from Georgia, and his Republican challenger, Herschel Walker, are making their final pleas to voters ahead of their Tuesday runoff election. Warnock goes into the vote with a small lead in the latest polls. Walker had trouble winning over swing voters in the evenly divided state. Some were turned off by his ties to former President Donald Trump, according to Axios, and others by a series of awkward remarks about vampire movies, pregnant cows, and how our good air decided to float over to China's bad air. If any of those statements were made in proper context, they might have a different meaning. Democrats held on to control of the Senate by winning 50 seats in the November midterms, but holding on to Warnock's seat would give them a potentially crucial one-seat cushion. As someone who grew up in the Deep South in the great state of Georgia, I know what an incredibly conservative state it was when I was growing up. Now, I moved away at 17, joined the Navy, fell in love, lived in California, been in the desert here in Arizona for, about 40 years. All I can say is something's funny going on, or the consensus of the people who populate the state has greatly, greatly changed. Number 6, about 45,000 customers remained without electricity in a south central North Carolina county after 2 electric substations were damaged by gunfire late Saturday. It could take until Thursday to restore everyone's power because some of the substation's equipment has to be replaced. That's from Jeff Brooks, a spokesperson for Duke Energy. Unlike perhaps a storm where you can go in and reroute power somewhere else, we are looking at a pretty sophisticated repair with some fairly large equipment. The Moore County Sheriff, Ronnie Fields, said investigators believe the attack was targeted, although he didn't offer details on a motive or suspect. The county imposed a curfew overnight Sunday and early Monday due to below freezing temperatures and dark roads. So our prayers are with those folks that have no electricity, have no heat. God, watch over them. That news was courtesy of NBC and the New York Times. I also commented in the discussion group today in the Breeze channel. If you're a member, keep in mind we have our own social media channel. So if you're fed up with Facebook or ticked off by TikTok, we do have a family-friendly social media channel called The Breeze. It's where we shoot the breeze about non-trading topics. So even if you're not a trader, you might enjoy The Breeze. Okay. All right. Oh, and I also said in my post today, when we talk about the electrical grid of the U.S., our whole nation is vulnerable to attacks by terrorists in a number of different ways. And I said I would not go into any of the different ways that I think it could happen, because I don't want to be responsible for creating this generation's anarchist cookbook, which, if you're an old hippie like me, you know exactly what I'm talking about. Number 7, from the Associated Press. Reform-minded candidates won 6 of 14 United Auto Workers board seats in a union election held under a federal corruption settlement. UAW's leaders used to be picked by delegates at a convention, but all members were allowed to vote for the first time in these elections. In the race for UAW president, incumbent Ray Curry led challenger Shawn Fain by 614 votes, 38.2% to 37.6%, according to unofficial results posted early Sunday on a federal court-appointed monitor's website. Since nobody in the 5-candidate field got 50%, Curry and Fain will advance to a January runoff. Reform candidates won 2 of the 3 vice presidential slots, with 2 Curry allies headed to a runoff for the 3rd. Number 8, courtesy of Reuters. The Group of 7 price cap on Russian oil took effect Monday. The G7, the European Union, and Australia will enforce the policy in a bid to limit Moscow's financing of its war in Ukraine. The EU also has imposed an embargo on imports of Russian crude by sea. The United States, Canada, Japan, and Britain have announced similar policies. The G7 price cap bars shipment of Russian oil to third-party countries using G7 and EU tankers, insurance companies, and credit institutions unless the oil is priced at or below the cap of $60 per barrel. Under the latest market price of about $67 a barrel at the time this article was written, Russian officials said Saturday that Moscow would not accept the price cap. Okay. Number 9, from Major League Baseball and the New York Times. Baseball's Contemporary Eras Committee unanimously elected popular first baseman Fred McGriff in the National Baseball Hall of Fame on Sunday. The rest of the 8 candidates fell short. McGriff was previously considered for the honor by the Baseball Writers Association, but never made it in 10 years of eligibility. McGriff, who played for 6 teams over 19 seasons, was the first player in history to hit 30 or more home runs for 5 different franchises. He hit 493 career homers before retiring in 2004. His feats were overshadowed by the unprecedented number of players tainted by the steroid era. Barry Bonds, who set the single-season record of 73 homers in 2001, got fewer than 4 votes on Sunday. And number 10, as you know, it always seems like the sad one, courtesy of Variety and the New York Times. Longtime Sesame Street star Bob McGrath has passed. His family said Sunday on his official Facebook page he was 90 and died of complications after a stroke. His daughter, Kathleen, told the New York Times, McGrath appeared in the Sesame Street pilot in 1969, playing friendly music teacher Bob Johnson, and remained a mainstay on the show for 47 seasons. He made his last series appearance in 2017, but continued to participate in events tied to Sesame Street. McGrath was known for sharing educational lessons in his interactions with the show's puppets, but he also helped add music to the program, with original songs including People in Your Neighborhood, Sing a Song, and the ever-popular If You're Happy and You Know It, Clap Your Hands. And those are 10 things you need to know today, December the 5th, 2022. Off to the daily chart. That's where we always start. Why do we go to the daily chart first? Because the institutions, the hedge funds, the Goldman Sachs of the world, the deep pockets that move the markets, they look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Why? Because their accounts are denominated in hundreds of millions and billions of dollars, while our accounts tend to be denominated in thousands and tens of thousands of dollars. So what that means is they can withstand a much deeper drawdown than you or I would be comfortable with, and they can stay with a profitable position far longer than you or I might be comfortable with. So we go to the daily chart to see which way the institutional money is flowing on any given day. Now, this doesn't just apply to the S&P 500. You could be trading Google or Apple, Amazon or Walmart. You could be trading Bitcoin or Ethereum. You could be trading the British pound or the US dollar. Doesn't matter. Price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. So a good idea to know what the deep pockets are doing, because the market is always right. And so our strategy and our indicators are not designed to get a jump on the market or outsmart the market. Our strategy and our indicators are designed to help us actually see what the market is doing, not what we think it should do, or not what some pundit on TV said it would do, but what it's actually doing. And then all we need to do is do the same thing the market's doing long enough to get our goal for the day. This morning in the live training room, it took Michael one trade. Had his goal for the day. Were he not required to spend 2 hours training and teaching, he would have been able to just put his mouse away and be done for the day. Now, that's not going to happen every day. If it never happens, you need to book some mentoring sessions so we can help you figure out why. Because it should happen some of the time, but never sit down expecting it to happen, okay? Sit down with the expectation that you're going to take as many trades as it takes to reach your goal for the day. If it happens to be one trade, first time it happens, it's going to leave you feeling a little bit empty, a little out of sorts. I remember the first time it happened to me way back in 2005. It was like, what the heck do I do now, right? Because I grew up with a very strong work ethic, worked long hours, multiple jobs to support my family, my wife. I've been married to one woman since I was 23 years old. And hard work. I watched my dad work hard. I watched both of my grandfathers work very hard. My grandfather on my mother's side, he even had a side hustle way back. We're talking in the 60s. He worked in a factory that made pants Monday through Friday But on Saturday, he ran a barbecue pit. And man, I loved going over and spending Friday night with him and my grandmother, because we'd stay at the barbecue pit till late, about 9, 10 o'clock. And then he had some hired hands who would continue turning those hams over the big pits, you know. And they would show up bright and early Saturday morning, start pulling those hams off the pit and off the spit, and chopping and slicing and dicing and making Brunswick stew and some people call it hash, not the kind you smoke, the kind you eat. Okay, it's I don't want to tell you what the ingredients are because you probably wouldn't want to eat it, but anyway, I had a very strong work ethic, and so the first day that I sat down and got my goal on the first trade with real money, I was like, it's 6:45 a.m. What am I gonna do? Let me tell you what I did. I just made $5,000 in 15 minutes. Because I was trading more contracts than I should have been trading at that stage in my learning process. I'll tell you what I did. I kept trading. And by the time the bell rang and I had to, this is when I was still trading from an office downtown. On the drive home, I was $5,000 in the hole. Yeah. So you see, from being up $5,000 to being $5,000 in the hole, that means you lost $10,000. Made the 5 you made, you lost the 5 you made, and then another 5. I was rattled to my core. When I came through the front door, my wife says, "What's wrong with you?" I said, "Nothing." She goes, "Oh, yes, there is. I know you. I've never seen that look on your face." I said, just let me be for a little bit. Came upstairs in my home office and set my chair, prayed, and God has put in my spirit, if you can lose that much in one day, you can make that much in one day. Shake it off and start doing the things you're supposed to do the way you're supposed to do them. At that stage in my trading, I should have been trading 1 contract, not 10. I had put the cart before the horse because I was such a smart guy. Because I had been successful in many other business endeavors, I just thought that would automatically translate into my new trading business. Well, it doesn't. In fact, so much of what happens in the world of trading and in running a trading business is completely counterintuitive to things that happen in the regular business world. So that was a lesson hard learned. I wish I could say that I learned it that first day and never repeated that error again, but that would be a lie. And I promise to just always tell you the truth as best I understand it. So that's my story, and I'm sticking to it. Gary asks, should the fib on the daily ES chart be moved up? No. No, because that's a great question. You see, the downtrend started up here at this high on March 29th. And we've spent most of the year in a downtrend. The low of the downtrend came in on October 13th. So we've come up to the 50% reverse fib. So the fibs are drawn from the high to the low. So we would have to surpass the March 29th high or drop below the October 13th low before we would actually change the fibs. These other numbers you see here are fib extensions, which is still 14th century math, just applied in a little different manner. Fibs are based on 14th century math. whether they're fibs, reverse fibs, or fib extensions. Now, when we caught this rally here, now even though we've been in a downtrend most of the year, there have been a number of occasions where we attempted to break out of the downtrend and failed and failed and failed. Now, these fib extensions were created by going from this swing high on August 16th to the low put in on October 13th to the retracement high put in on November 15th. Okay, and what that does is that now that actually, now that you mention it, that one does need to be changed because we have a new retracement high. So we got to capture that high right there. Okay, I'm really glad you brought that up. So the fibs themselves, from the high to the low, either the high's got to be broken March 29th or the low of October 13th before these actual fibs will change. And these are reverse fibs. Typically with fibs, you draw from the low to the high. With reverse fibs, you draw from the high to the low because you're in fact in a downtrend. Okay, so price came up to the 50% reverse fib and actually appeared, and this was the day last week when Jerome Powell spoke and the markets just went nuts. And then here's the following day, Thursday, not looking so good. And here's Friday's candle, okay, which came all the way down through support at the step line, but by the end of the session had recovered most of the day's losses. And then this candle opened last night at 6 p.m. Eastern, and down it comes, red through potential support at blue and climbing, potential support at the step line. All that's left as far as potential support would be Friday's low, which was 4,006 3/4. Okay, we're real close, but we haven't broke it yet, so we have to respect that number as support until broken. Once broken, then it should be a very fast trip down to the daily BBC. That's the green line. If you're new, you're probably wondering, what does that mean? Okay, it just stands for bull bear cross. When price crosses above the green line, we're bullish and anticipate higher prices. When price crosses below the green line, we're bearish and anticipate lower prices. Above, below, above. The pullback to the BBC holds more often than it doesn't. Everything I just said applies not only to the S&P 500 E-mini futures daily chart, it applies to all markets, all stocks, and all time frames, from 1 minute to monthly. Everything we do, everything we teach, every tool that we provide are based upon the underlying principle upon which markets operate. And that is price flows from support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. So the indicators serve as dynamic support and resistance. And as we go to the 30-minute charts here, you're going to see the weekly trading zones. They provide fixed support and resistance. Now the new weekly trading zones, they come out Monday morning at 6:15 a.m. Eastern. Once they're published, and we've published them since December 14th of 2009, every week for our members. Once they're published, they're carved in stone for the entire week. What you're looking at right now are last week's zones, because all of the alerts that go out on Sunday night are based on the previous week's zones, because the new zones haven't come out yet. Now, someone commented in the training room this morning, I think it was, or either in the discussion group, that, and I always say this, but I was glad to hear somebody speak it back in agreement. On Monday, you really should be looking at last week's zones and this week's zones, even after the new zones come out. Because the zones have what I call carryover power, for lack of a better term. In other words, it's usually, by Monday afternoon, Tuesday, that the new zones really take hold and become the dominant fixed support and resistance for the entire week. So on tomorrow's broadcast, the zones you see will be the new zones that came out this morning at 6:15 a.m. Eastern. But all of the logic alerts and the CTAs that came out last night were based on last week's zones. So on the S&P, here's where we opened. Okay. Hannah put a comment in the discussion group that red and falling had showed up, which we know is potential resistance, and that in order for price to trade higher and trigger the CTA, we would have to overcome red and falling. Well, we traded a little above it, but it didn't hold. Same thing here. Then once price got below the BBC, bull bear cross. Bullish above it, bearish below it. That was a game changer, okay? Because now we're looking for opportunities to be short the market, because price is below the BBC. And look where price came down to. Right to the weekly trading zone, found support, caught a bounce up to red and falling, came back down to last week's zone, found support, consolidated, pulled up to the BBC. The pullback holds more often than it doesn't. When you get a bearish cross, that's where the red line crosses below the green line on your 30-minute chart. Okay, consider that your roadmap. You're going to use a smaller time frame, 7-tick range, 8-tick range, 5-minute, whatever you're comfortable with, to time and execute your entries and exits. Okay, so we pull back to the BBC, the pullback held, and then down we come to the zone again, last week's zone. It holds as support. Just like up here, we held as support until proven otherwise. Then we hit this zone, and it held as support. And price pulled back. Now, you got to, in your mind's eye, you got to see that this was a huge green candle. And it almost touched the BBC, but it missed touching it by just a tad. But by the time this 30-minute candle closed, it went from being a big green candle to a red candle with a wick showing that was green. Okay, that all happened in 30 minutes. That was the opening candle, the opening 30-minute candle on Wall Street, which will quite often be the largest candle of the day. Not always. I don't trade the first 30 minutes. I don't issue alerts during the first 30 minutes of the Wall Street Open. Now, I will issue alerts pre-market, around the London Open, 3 a.m. I'll issue alerts around the clock as opportunity presents. But because of the extreme volatility that we often see during the first 30 minutes, I don't do anything. I don't trade. I don't put out alerts. Now, Michael and Valerie both, they hit the ground running in the live training room at 9:30, okay? So it's really a matter of personal preference. if you have an issue with getting stopped out or a lot of break-even trades, take a look at the time of day those trades happened, okay? And if you find that you get stopped out more between 9:30 a.m. and say 10:15 a.m., because quite often there is market moving news at 10 a.m. Eastern. Today we got the ISM numbers, better than expected. That came out at 10 a.m. That's this candle right here. Numbers were better than expected, and look what happened. Price dropped all the way to the next zone below, where it found support. And then it bounced back up just far enough to get above the trigger. Now, I haven't said this yet, so let me say it. Once an alert triggers, there is a greater probability of it triggering multiple times than not triggering multiple times. Some days it'll be twice, 3 times, 4 times, 5 times. We've seen days as many as 10 times. Why? Because important prices and important areas are almost always tested. So once an order triggers, you should anticipate that price is going to pull back and it's going to trigger again. Also, and this is super, super important, you should look at the CTA number first as a target. Once that gets penetrated, now it becomes an entry, okay? So, let's say you were watching the markets last night. Once price got below blue and climbing, remember what I said about if price starts trending down towards the CTA, look for opportunities to be short the market. Beautiful opportunity here, here, here. Because we're below the BBC, so we're trending down towards the short CTA number. And so there were just a lot of great opportunities to be short. Where did we find support? The zone. Even though it was last week's zone, support. When price drops to a zone, we expect it to be support until proven otherwise. When price rallies up to a zone, we expect it to be resistance until proven otherwise. Keep in mind that zones are an area just as fibs are an area. They both print a specific price point on your chart, but they're still an area. Just like on the daily chart where we ran up to the 50% reverse fib, the yellow line. See, that's an area, okay? We spiked that area. We certainly didn't come close to the 62% reverse fib. We spiked that 50, and then the market failed, and now it's headed down oh so close to Friday's low. We break Friday's low, and high probability we'll close the session at or near the daily BBC, which is currently 39.76. Okay. Now remember, all the alerts are based, both logic and CTA, on the zones and on the current trend. Trend is defined on the 30-minute chart. Price is above the BBC. We're looking for long trades, but we know where our obstacles are. This opening candle last night gave us an obstacle at 40.75.75. And then if we look back to Friday, this vertical line separates today, Monday, from Friday. Back here's Thursday. Okay, so if we had taken out that initial high on the opening candle last night, then the next obstacle would have been this high, which is why the CTA was there. Okay, we needed to clear all those obstacles Once blue and climbing gets directly above price, that means it's most likely on its way to turning to red and falling. And so on the way up, blue and climbing provides great support. Okay? But then once the step line crosses from the left side to the right side of blue and climbing, that's your first indication that price is going to attempt to pull back to the BBC, which it did. And then it rallied into resistance, red and falling, back to the BBC, back to red and falling, and then price gets below the BBC, and we have opportunity after opportunity after opportunity. Now down here, 40.45 was the number, so you had lots of opportunities to get your goal for the day, and then we traded down to 40.44, 1 point. Okay. Now remember, you're using your smaller time frame to time your entry. It can be a 7-tick range, an 8-tick range, be a tick chart, 5-minute chart, whatever you're comfortable with. Okay. So you may or may not have gotten triggered into this trade. If you did, if you entered the market, if you watched all this and then got short at 40.45 on this first move, got stopped out. Okay. So we get a pullback, and remember, once it triggers, it's going to probably trigger again. So down we come. And that trigger takes us all the way down to 40.22. That's 23 points at $50 a point. That's over $1,000 per contract traded. Once you've earned the right to trade 5 contracts, that's $5 grand. Once you've earned the right to trade 10 contracts, that's 10 grand. But don't do as I did. Don't put the cart before the horse. Okay? It's awkward for both the cart and the horse, and it will help you blow up an account really quick. When you become a passport holder, you're going to get a 24/20 blueprint. It helps you write your business plan. It helps you write your trading plan. 9 out of 10 traders fail, and 9 out of 10 traders don't have a business plan, they don't have a trading plan, and they don't have a live teacher 2 hours a day, nor do they have access to unlimited one-on-one mentoring sessions, nor do they have a supportive community surrounding them, cheering them on, not stabbing them in the back, but helping. Okay? We're all on the same team. So, price then pulls back and gets just above the trigger. Important prices, important areas are almost always tested. So we get back above the trigger, and then we drop all the way to 4,006. That's basically 40 points at $50 a point, $2,000 per contract traded. Now the blueprint is going to put you in sim as you're learning the strategy and how to read the indicators. You need to put together 10 consecutive days in a row where you reach your goal in 10 trades or less. Once you accomplish that, the blueprint will give you the green light to go live with 1 contract. Now your goal, once you're trading real money, is to increase your account balance by $2,000. Once you reach that milestone, the blueprint will give you the green light to add a second contract. Now the huge difference between the first contract and the second contract, your first contract is funded with your startup capital. But if you follow the blueprint, your second contract is funded with profit you earned in the market. Huge difference. See, we're not just teaching you how to trade, but also how to run a trading business. Now, the blueprint's going to notify you when it's time to add contract number 3, number 4, number 5, number 10. It's called the 2420 blueprint because it's designed to help you go from 1 to 20 contracts over a period of 24 months. Okay? If you don't get there in 24 months, don't feel bad. Okay? And maybe you never even want to trade that many contracts. Maybe you're not comfortable with that much risk. I mean, if you just earn the right to trade 5 contracts, when you first start trading, whether you're in SIM or with your one contract, 2 points out of the S&P is $100. 10 ticks in crude or gold, $100. 20 points in the Dow, $100. So whatever market you trade, okay, the goal is to make $100 per contract. Okay, and then you add 1 contract at a time when the blueprint tells you it's time. But you only add 1 at a time, and you only add with profit you earned in the market. Along the journey, if you have 2 consecutive days in a row where you do not reach your goal, you need to come out of the live market, back into the simulator. That is not a walk of shame. It's a sign that you're a man or woman who is serious about building a successful trading business. You're not playing the slots here. You're not looking to get rich quick. You're willing to do whatever it takes to become a consistently profitable trader. And so you come out of live, back into sim, and then you book a one-on-one mentoring session with me or Michael or Valerie or Bert, whoever you want to talk to. Okay, we'll go over your trades with you. We'll help you spot what you might have missed. Perhaps you were just trading in conditions that were unsuitable for trading at the moment. Okay, we'll help you troubleshoot what happened, and then after a day or 2 in sim, your confidence will return, and then you go back live wherever you left off. You know, if you'd already earned the right to trade 3 contracts, you don't have to start with 1 again. Once we've troubleshot the problem and you feel that you have it under control, your confidence is back, then go back to your live account and pick up right where you left off. But again, you're only adding 1 contract at a time when the blueprint says it's time, and you only add with profit you earned in the market. If you follow that, it sure makes it harder to blow up an account. In order to blow up an account, you will have to break the rules you're taught. Okay? Plain and simple. All right. So we know what happened with the S&P. We had 1 trigger, 2 trigger, 3 triggers. This move is worth $1,000 per contract traded. This move is worth $2,000 per contract traded. And why did price stop right here? Well, it is a zone 4005/4006, but it's also the low of Friday. Super important in trading. Always look left. Looking left will show you where your obstacles are to a long trade, to a short trade. Help you stay on the right side of the street. All kinds of stuff. When you're teaching your kids how to cross the street, tell them to look both ways. Trading, you only have to look left. All right, I spent a lot of time with the ES. We'll just make a quick run through the rest of the markets. Here's the Dow. And let me just say, we trade every market exactly the same. Whether it's the S&P or the Dow, Russell, crude, gold, silver, euro, or Apple or Google or Facebook, the British pound, Bitcoin, Ethereum, because price flows the same across all markets and all time frames. So we're not teaching you how to trade one specific instrument. We're teaching you how to trade. Once you learn how to trade, now you can apply that life skill to any market, any stock, any crypto, and any Forex pair without tweaking or changing anything. The rules don't change. The settings on the indicators don't change. It all remains the same. And that's really beneficial for folks whose time is limited, because you still have the day job or other responsibilities in your life. Maybe you, in your mind, think of yourself as, I'm just an ES trader. And it's perfectly fine to focus on one or just two markets in the beginning as you're learning. There's nothing wrong with that. But once you've mastered the strategy and reading the indicators and understand what the chart's telling you, if you sit down at whatever time of day around the clock to trade the ES, if there's not a setup in the ES, then you can go look at crude or gold. If it's during regular trading hours, you can look at any particular stock. Cryptos trade around the clock. Forex, around the clock. So there's always opportunity setting up somewhere. So again, it's okay to focus on one or two markets in the beginning when you're learning. But after a while, you don't want to pigeonhole yourself, because you literally might have to sit there for hours for the S&P to give you the setup that you want. But when you can just click through the markets like I do, see how I've got them tabbed here? I go where the opportunity is. And I will encourage you to do that once you've learned the strategy and how to interpret the indicators and what they're telling you. Okay, so on the Dow, same thing as the ES. We made that initial run on the opening candle. It brought us right back to the weekly zone where we consolidated for so many hours. Only three things happen at a weekly zone. The most common is what you see right there, consolidation. That's going to be about 70% of the time. 20% of the time, you'll see this, rejection. In other words, price ran all the way up to the zone, but by the time the 30-minute candle closed, the only thing left touching the zone was the wick. Price got rejected. So consolidation, most common. Second most common, rejection. The third and least common, but it certainly happens, is when price trades through a zone like it's not even there. Okay? Right here you can see price traded through two zones like they weren't even there. But when that thing ran out of steam, it retraced to the previous zone it had sliced through, and then it continued in the direction of the slice. Does that happen every time? No. Does it happen more often than not? Yes. All right. So the S&P pays 50 a point, the Dow pays 5 a point. So once price got below the BBC last night, you had all this room down to the zone to get your goal for the day, then again here, and then here, and then you finally get to the target, right? And once penetrated, the target becomes an entry. Hopefully, you've got your goal for the day long before you ever get here. Once we hit 34,235, we dropped to 34,210. It's 25 points, $5 a point. Then we get back above the trigger, we trigger again, and we trade down to 34,070. Hey Alexa, 235
I'm
minus
having trouble
70.
connecting to the internet.
Oh.
Take a look at the help section in your Alexa
Oh,
app.
okay. Alexa, stop. Alexa's not connected to the internet. So in your mind, go 235 minus 34,063. Multiply that times 5, and you got your answer. And then after that big move down, price pulls back. Where? To the BBC. Price always reverts to the mean. In our case, the mean just happens to be green. Price always reverts to the mean. And the first pullback after a bearish cross, when the red line gets below the green line. Now the pullback to the BBC on the 30-minute chart almost always holds. Well, it holds more often than it doesn't. Okay? But the first pullback to the BBC after a bearish cross, or the first pullback after a bullish cross, has a really high probability of holding. So anyway, this pullback held, and it took us all the way down to 34,013. It's basically 34,000. So that's 235 points at $5 a point. That's over $1,000 per contract traded. On the Russell. Now you'll notice on the indices, the S&P, the Dow, the Russell, we'll do the NQ next. See how similar they look? They almost always do. The S&P is referred to as the bellwether by many, because that's 500 large cap companies. The Dow's 30 blue chip companies. The NQ composites 100 tech, 100 companies. And then the Russell 2000, that's 2,000 small cap companies. However, the other three indices almost always follow the S&P. That doesn't mean the S&P necessarily moves first. There is no one market that always moves first. Okay? And you can waste a lot of time and money chasing and tracking and trying to figure, because if you could figure out which one always moves first, then you would just trade the other one. And you'd never have to get stopped out again, right? Unfortunately, it's not how it works. There is no one market that always moves first. Okay? But at the end of the day, the other three indices will typically have done what the S&P has done. So we only got one trigger on the Russell last night, but we had all this. Once price got below the BBC and pulled back to the BBC and the zone, we had all this room to get our goal for the day on a short trade. And then we hit 1876, and from 1876, we'll call it, just for the sake of math, make it easy, simple. Trading is never easy, but it can be simple. From 76 to 46, that's 30 points. At $50 a point, that's $1,500 per contract traded. And you'll notice how price respected last week's zone. Then when it got below it, it pulled back up to it and respected it. Here we had a slice. Price retraced to the zone it sliced through, continued in the direction of the slice. Only three things happen in a zone. Again, we've published them since December 14th of 2009. So we have a lot of data on how price behaves around the zones. And the good news is, it hasn't changed since we first published the zones. Michael and I traded them for a while, and once they were suitable for public consumption, then we started sharing them with our members. And once you have them on your charts and you understand how price behaves around them, they will become one of the most important tools in your trading toolbox. And the Russell's still dropping. It just took out Friday's low. Has the S&P taken out Friday's low? Friday's low was 4,006 3/4. Today's low, 4,005. Okay, we've broken, but only by like 1 3/4 points. So give it another point, okay? You don't want to get caught up in a head fake. Give it another point, and then anticipate that price is going to drop to 39.76.2. And again, the pullback holds more often than it doesn't. All right, NQ. This is where the market opened last night. Looks an awful lot like the other indices, right? Red and falling. Got below the BBC. Consolidated. Dropped. Finally triggered. I mean, there's plenty of room on the way down. From here to here to here to get your goal for the day. 924. First drop took us to 920 and a half. It's 3.5 points, $20 a point. And we got back above the trigger, dropped again. This time we dropped to 11,864. That's about $1,200 per contract traded. And then price got back above the trigger, pulled up to the BBC, pullback holds more often than it doesn't. Down we go again. And from 924 we traded to the zone below. Last week's zone, remember, okay, which was 11,825/826. So that's roughly 100 points, $20 a point. That's $2,000 per contract traded. Lifetime membership with no upsells, no recurring fees, no new shiny objects to buy every other week, no nonsense. It's $5,000. There's people in the audience today who've lost more than what it costs to become a lifetime member and actually learn how to trade. If you continue to go down the same path, you will continue to end up in the same place. The same recipe bakes the same cake. Okay? So you have to make a decision. Do you continue doing what you've done? Are you ready to change direction? Are you ready to slow down, settle down, find a home, become a part of a supportive community that provides around-the-clock support via Telegram, and all the other stuff you saw on my screen earlier? You get to find out by taking a 5-day free trial. You can start any day of the week. You'll still get 5 consecutive trading days. Whether you start on a Tuesday or Wednesday, it doesn't matter. You get 5 consecutive days with access to everything. All the alerts, the indicators, the platform, everything. No credit card required. We're that confident that once you see it, this puts the ball in your court. Because we're letting you in, we're letting you drive this baby for a whole week without even a credit card, okay? So if you don't show up for class, if you don't do the work, if you don't ask the questions, if you don't participate in the discussion, well, then trading's probably not for you. See, you have to really want it, okay? And so we give you that opportunity to truly see if what we do is right for you. It has been over the years for thousands of traders, but hey, maybe it's not for you. Maybe you are looking for a get-rich-quick scheme. We're not that. We don't have magic or parlor tricks or circus acts. We don't have secrets. The only secret of the markets is there's no secret. I can dispel any myth you might hold about markets. I'm the amazing Randy of dispelling myths about markets. Some of you know who he is, some of you don't. If you don't, you're interested, you can Google him. Anyway, moving on. NQ, credible, still dropping. Okay? From 924 to 800. That's 124 points at $20 a point. By the time this thing's finished, it's probably going to be a $3,000-$4,000 per contract move. That's per contract. Now, some people, because they spent a lot of time and a lot of treasure in the markets, even though they haven't been successful or consistently profitable, they feel somehow, I don't know, oh, trading in sim, well, that's humiliating. No, it's not. It's how you get on the right track, on the good foot, as they used to say in that song back in the 70s. Who was that? Ray Brown? Ray Charles? No, it wasn't Ray Charles. James Brown. The good foot. You got to get on the good foot. Okay? If you can't humble yourself to trade in sim long enough to put together 10 consecutive days in a row, then we're not for you. Everything that we ask you to do in your training process, we're very serious about. What you learn in the live training room is rules-based trading. Any question you can ask has already been asked, and we already have the answer ready to give you. Okay? But you have to ask the question. That's why you have access to the question box in the live training room. Now, what goes on in the live training room might seem a little fast for you. Whoa, I can't keep up with that. It's too quick. But what I'm showing you right now is that all the same principles, all the same everything, is as true on a 30-minute chart as it is on a 7-tick range chart, as it is on a daily chart, a weekly chart, a monthly chart, or a 5-minute chart. Fluid across all markets, all time frames. We've covered all the indices. Let's do crude. Okay, we have some two-sided action on crude. Here's where the market opened last night. Now we had red and falling on Friday, but we opened last night with a big green candle that turned red and falling into blue and climbing. So once we got above this zone, you had room to get your goal from, I don't know, 80.95, 80.85, up to 81.30, about $300. Now, why did price stop right there? Wouldn't you love to know? Okay, I'll tell you. Look over here. See this bearish cross? Red line got below the green line. Now, this high, just follow the horizontal line on my cursor. Bearish cross. When there's a bearish cross that leads to an extended move, the first time price revisits that area, it will almost always initially be resistance. And then on the second attempt, it very well may make it through. Same is true of a bullish cross. Okay. Okay. So we get to 81.40, which is the CTA number. and we ran up to 81.84. That's $440 per contract traded. Then we got back below the trigger, and we did run up again to 81.80. And then we got below the BVC, we had red and falling. This low, opening low. This is where the market opened last night. When price got to that point, remember, the opening price led to that. And so when price returned to that area, look what it did. So we triggered once, triggered twice, and then we trigger a third time, and we go from 81.40 to 82.70. That's $1,300 per contract traded. Once you're in the right to trade 10 contracts, you can do the math. Then what happens? Price gets below the BVC. We drop to the zone and find support. We get a little bounce, and now we go again. And then we trade through 79.60 down to 79.02. $580 per contract traded. Now here, we went one tick back above the trigger. See the high, 79.61? And from there, we drop all the way to 77.33. Here, I'll just do the math, since Alexa's offline. Hey Alexa, try to reconnect to the internet.
I'm having trouble connecting to the internet.
Okay,
Take a look at the help section in your Alexa app.
okay, thanks. 77, what did I say it was, 33? Yeah. $2,270 per contract traded. Now this was the published target, okay? So just to the target, which was 78.75, from 79.60 to 78.75, had it, if the target was 78.60, that'd be a $1 move. That's $1,000 per contract traded. When the price of crude moves $1, that's worth $1,000 per contract traded. When gold moves $1, it's $100 per contract traded. When silver moves $1, $5,000 per contract traded. Crude finding support and consolidating here at the weekly zone. Now it looks like I got some questions in the question box. Yeah, Gary, you absolutely. When I was saying that I needed to, I'm just looking at these questions. When Gary had mentioned about the fibs, then he was talking about the extensions, and yeah, you were dead on. He typed in ding, ding, ding. That's what I meant. Thank you very much for pointing that out. You show the CTA at 40.55. Yeah, that's what I show. The short side, 40.55. Did I have something else up here? Oh, I put that in the wrong place, didn't I? It's actually 40. Thank you very much, Gary. It's actually 40.55, not 40.45. So that's even better. Thank you for pointing that out. 40.55. There we go. So, once price got below the BVC, then there's room to get your goal for the day down to the zone. And then we pushed through down to 40.53 and a quarter. So it's 1 3/4 points. And then we triggered, and then we triggered again. This time down to 50 and a half. And then we got back above one more time by 2 ticks. And we made this drop from 40.55. We'll just call it 55 points, so $50 a point. Let's see. 50 times 55. $2,750 per contract traded. But the trade to target, okay, is on every short, it's the zone below. So we hit the zone below once, and then we did it twice, and on the second time we just kept going. And the more comfortable you get with the strategy and the methodology and the indicators, then you'll learn how to either take profit and re-enter or stay with the trade, whichever fits your personality the most. John said, I have wasted a lot of time and money. Someone once promised me a red light, green light system, circa 2000, trading seminar. It seemed like it was going to be so easy, LOL. But the CFRN uses red and green, but it makes logical sense. Now I can see this is the way. John, thank you for the kind comment. I'm sorry that you've already had to log out, but maybe you'll listen to this a little later. Or maybe you just switched over to the YouTube channel. But John does make a very valid point. Everything that we do is based on logic. And the more logical it becomes to you, the logic just kind of becomes common sense. Because price can only do 3 things: go up, go down, go sideways. Price spends more time going up and going down than it does going sideways. When it's flat and sideways, let's just stay out. Or go look for a market that has true opportunity. Okay? Don't mentally try to create opportunity where opportunity doesn't exist. It's really important. John went on to say, crude, gold, ES are all dumping now. The 30-minute charts look similar. Yes, John, absolutely correct. Chris says, how much is one contract for the current chart? Well, the ES, for example, the one I've got up right now, depends upon what broker you're with, but intraday, the margin required to put on a one contract trade is $650. And then on the Globex session, if you carry over from one session to another session, then you get subjected to the full margin. But what I'll do is, let me do this. Let me show you a little something. Type in, or type in your broker's name. Margin requirements. Margin requirements, here we go. So it will take you to a page like this. Click that. And when this page decides to load, let's try that again. See, it's slowly loading. I don't know why it's so slow. But anyway, when the page loads, I may just have too many tabs open. I got a couple hundred, but anyway, I'll try it one more time. Refresh this page. Try this again. Anyway, a page will populate and it will show you all the different markets. S&P 500. Oh, here we go. Okay, just got to be patient sometimes.
Turkey sandwich.
Okay. If we go to the indices, scroll down to the Emini S&P 500. I'm sorry, it's $750 intraday. Overnight trading is a little more expensive. Okay. Now, many brokers, once the new session opens, remember the markets close at 5 and then they reopen at 6 p.m. Eastern. Once the markets reopen, many brokers honor their day session rates once the new session starts. So check with your broker to see. Intraday, the NASDAQ, you need $1,000 of margin. Now, when you put up $1,000 of margin to trade an account, or $750, does that mean you're risking $750? Well, yes and no, because you're going to use a hard stop. In the room, Michael teaches you to use a 10-tick hard stop. Each tick is worth $12.50. So in the room, your maximum risk is $125 per contract traded. So you put up $750 to make the trade, you get stopped out, you lose $125. The balance is then just credited right back to your account. Now, if you're trading without a stop and you just let it run away, well, it will blow out your account. That's why we teach you always use a hard stop, a physical stop, not a mental stop. People with mental stops usually get carried out on a stretcher because they don't think the price could possibly go any lower or any higher, and then it does. A hard stop is the cheapest insurance you'll ever buy. Gary said he's familiar with the red light, green light, and didn't work well for him either. You're very welcome, Chris, and feel free. You may have already booked a one-on-one session, I don't know, but if you haven't, feel free to, and we can go over anything that you want. Okay? All right. So let's get through the rest of these here real quick. We were on crude. We already covered crude. Silver. Boy, this is 2 pennies is $100. So here's where the market opened, above the BBC, so that in itself is bullish. You can get above blue and climbing, so you got room to get your goal for the day before you hit the CTA number. And then from 23.53 we trade up to 23.69. That's $800 per contract traded. Then we get back below the trigger again, to 23.60. So that's 7 pennies, $350 per contract traded. And then back below the trigger again. But you'll notice now that blue and climbing has gotten directly above price. Now when that happens, it will typically act as resistance because it's on its way to turning into red and falling. So price gets below the BBC. We get a leg, we get a retracement, the pullback, holds. Price starts dropping again. And then you've got all this room to get your goal for the day. And then we do trigger the short side. And from 22.89 it goes right down to last week's weekly trading zone. Earlier in the broadcast I said, on Monday, it's fine to go ahead and get your new zones on the chart, but you can just refer to the CTA channel for last week's zones so that you can print them out or jot them down for whatever market you're trading, and keep an eye on both until it becomes obvious that the new zones have taken over, and they haven't yet, okay? Because we're still consolidating right on top. In this particular market, we're consolidating at 22.36. So let's just say if it was 86 to 36, that'd be 50 pennies. That would be $2,500 per contract traded. When the price of silver moves $1 from, say, 23.70 to 22.70, that's worth $5,000 per contract traded. A $1 move in crude is worth $1,000. $1 move in gold is worth $100. $1 move in silver is worth $5,000. And that reminds me, we skipped over gold, didn't we? Gold, we opened right here. The initial candle was a pullback to the BBC, and then off we went. We got above blue and climbing, so lots of room to get your goal for the day. And then we hit the target, but we didn't trade through the target. So the long side never became an entry, but it gave you lots of room to get your goal. Okay. Then price got below the BBC. We got a leg and a retracement. Remember, this was after the bearish cross. This was the first pullback to the BBC. Bullish cross, first pullback to the BBC. And even when it's not the first pullback, which has the highest probability of holding, look over here. It held, and it held, and it held. You get the idea. Now, eventually it won't hold. That's what keeps markets fluid and tradable. Okay. Otherwise, it would just become this stagnant sideways thing that, there's no money to be made. So we get down to 1803. We pierce it, $80 per contract. Then back above, we trigger again, 1803, down to the zone at 1788/89. So that's $1,400 per contract traded from the published entry to the published target. And then it went further. But that right there is $1,400 from the published entry to the published target. The euro. Here's where we opened. We had a carryover trade from last week. There was one carryover this week and ran right to the target. Then we pulled back, got below the BBC, got below the target, got back above the BBC, ran to the target, We got below the BBC, and now we've been consolidating for hours at last week's weekly trading zone. So whoever made that comment this morning about how last week's zones are really carrying over and holding sway over the market, that was a great insight and a great comment. And so far, that's still what's happening. Okay, the last market would be bonds. $130.11 was the long CTA. This is where the market opened. We had a gap lower open. It never filled, so we have an unfilled gap there. And then price got below the BBC, 129.02. And so we triggered. Then we had a little pullback. Not enough to stop you out. And then we had a move from 129.02. From 129.02 to 128.23. That's $100 per contract traded. And then we traded down to 128.12. And then we got back above the trigger. Remember, once an alert triggers, it's probably going to trigger again. And here it goes the second time. 129.02 to 128.20. So a great day for the bond traders as well. Every market gave exceptional opportunities. And on the daily, now that we've taken out the Friday low, we fully anticipate price always reverts to the mean. But I got a sneaking suspicion we just might make it to that BBC before the close today. If not, then tonight. Okay? Remember, the markets will close at 5 p.m. Eastern, reopen at 6 p.m. Eastern. To become a lifetime member, you only have to go here, eminifuturestrading.com. A couple mouse clicks, lifetime member. No recurring fees, no upsells, no new shiny objects to buy every other week, ever. No nonsense. We do not insult your intelligence, okay? 9 out of 10 new traders will fail because they don't have a teacher. That's why we give you a living, breathing teacher 2 hours a day, putting on, taking off trades live in real time, explaining every move they make, every trade they take, and the rule behind it, and answering your questions while you trade along in sim as you learn the strategy yourself. The 24/20 blueprint, which is something 9 out of 10 new traders, they don't have a business plan or a trading plan. 2 very different documents. You do need both, and the blueprint will help you create both. Okay? Along with the live training 2 hours every trading day, you have access to unlimited one-on-one private mentoring, the strategy that we teach you, and the indicators you own for life work across all markets, all time frames, stocks, crypto, forex, doesn't matter. As a passport holder, you also receive the Logic 247 alerts around the clock, concierge trade alerts, access to the Thursday night members only workshop. It is your all access pass to everything we do, everything we've ever done, and whatever we do in the future. And whatever we do in the future will never cost you another dime. Pay once, member for life. Okay, we're going to wrap up this session. It's been a long session today, but that's good. We talked about never being part of a clique back on Friday. today. Where do you stand with Jesus? This is a question that every one of us should answer for ourselves, for our own benefit. Matthew 27:22, ask that question. What then shall I do with Jesus? When it comes to Jesus, we have three choices. Number one, we can reject him. That's what the Pharisees did. Pilate said to them, what then shall I do with Jesus who is called Christ? They all said to him, let him be crucified. Why? Because his grace and power exposed their lack of both. His truth exposed their error. And when you don't like the message, well, you know what happens to the messenger. Number one, reject him. Number two, avoid him. That's what Pilate's wife did. While Pilate was sitting on the judge's seat, his wife sent him this message. Don't have anything to do with that innocent man, for I have suffered a great deal today in a dream because of him. That's Matthew 27:19. Why do people avoid Jesus? Because he forces a reaction in our hearts. He calls you to make a choice between living for yourself or living for him. The chief priests accused Jesus of stirring up the people. And they were right. Before Jesus delivers you, he will disturb you. And some of us just don't want to be disturbed. And the third thing, you could either, number one, reject him, number two, avoid him, or number three, accept him. That's what Paul did. In Galatians 2:20 we read, Christ lives in me, and the life which I now live in the flesh, I live by faith in the Son of God, who loved me and gave himself for me. Pilate tried to wash his hands of the whole thing and avoid making a decision about Jesus. But that can be done. Jesus said in Matthew 12:30, he who is not with me is against me. So friend, if you have not accepted Christ as your Savior, if you've not accepted this free gift, ask yourself this question. Where do I stand with Jesus? You're either with him or against him. Some people say, oh, well, I'm agnostic. I don't believe one way or the other. Well, that's called unbelief. So, anywho, food for thought. Thanks so much for joining us today. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.